All righty. All righty. Welcome, everyone. This is the daily market wrap, the biggest charts in 30 minutes. My name is David Zimmerman. I'm the founder of DeFi University. And let's take a run through some of the biggest charts of the day here. Let's go ahead and do that real quick. Now, I want to start things off, of course, as usual, with BTC. Let's go ahead and start things off with Bitcoin here today. Now, nice bounce. What you've got to ask yourself here, let me remove this drawn object. What you've got to ask yourself is this price action and this bounce that we're seeing in March of the midterm year, is that equivalent to what we saw back in 2022? Is this the same thing playing out once more? Well, if it is, look at what happened after the bounce in 2022. Massive move lower. So what type of a move lower was that? Let's just go ahead and grab that price tool. That was, man, look at that, 60%. Unbelievable. So my expectation here is that this cycle will be no different than previous cycles. That's the expectation. I don't think that this time it's going to be different for any reason at all. You could say institutions, you could say, ETFs, you could say, maybe retail adoption, you could say, acceptance, any narrative you want to cook up. I just don't think that those narratives matter. I think what matters is Bitcoin has a cycle, Bitcoin has a pattern, and it's going to continue to repeat that pattern until it doesn't. And for right now, that pattern is just repeating one more time. So it looks like we're getting into the end of March. So it's March 11th. So into the end of March here, I think we're going to get just another push higher. Now, where will the push peter out here? Well, last cycle, last bear market, we got a 28% rally out of Bitcoin in March. In fact, why don't we just zoom out to a monthly and we can see that a little bit more clearly. What was the move like in March? I'm really curious. March of 2022. So March of 2022 is right here. So in March 2022 it was only plus 5%, but that was on the heels of a plus 12% Fed. So, we could definitely see a little bit more upside here. I don't know that, a 20% bounce from the lows in March is in order, though. Let's say that is. Let's say that from the trough to the peak, let's measure that distance. So from trough to peak, 46%. So that would mean over here, this bear market, that we get a bounce from those 60K lows of 40%. Oh man, well, that would bring us all the way up to the low 80s. That actually does make sense. That actually does make sense. I could totally see that playing out. A bounce to the low 80s for BTC, no doubt. No doubt that's possible. But I just don't think that it's in the cards. And the reason why I don't think it's in the cards is because the stock market is so weak right now. So this is shaping up to be a consequential week for stocks. We're taking a look at S&P futures here. This is distribution at an all-time high up here. And we're starting to back away. We're rolling over. We got this horizontal level of support. And if we just go ahead and remove that real quick, let's zoom out. So this has been a pretty clear level of resistance here for the S&P, anchored back to the highs from December 2021. We've got our anchor point for the lows back in March 2020, the COVID crash, and just drag that across the next higher lows, and you get your support on the bottom. Also notice there's your 200-week moving average down there. There's the 200-week. And so if you just turn this into a channel, then you'll get resistance up above. So this resistance up there, it held, it sure did, and the S&P is rolling over. So since the S&P is starting to roll over, unless we get a big bounce out of the S&P back up to either fresh all-time highs or close to it, unless that happens, I just don't see how in the world Bitcoin could possibly rally up to 84. That would be, a bounce in line with what we saw last bear market. But I'm just not convinced. So here's the thing. This move last bear, this flag, might be equivalent to this flag. This bear flag here may be equivalent to this flag. So if that's the case, then we should expect more upside. We should expect more upside out of BTC this month. That's what we should expect. And what should you be doing if there's more upside out of BTC this month? If the pattern holds, if that cycle holds, well, if we get more upside out of BTC this month, you really want to be a seller come the end of the month, like March 25th, March 28th, March 30th. You should really think about becoming a seller after we get more bounce. I think we're probably going to get back up to at least 74 and a half. That's what it seems like. Stock market seems resilient, but that could change. That could change in a dime. Take a look at the Russell. So the Russell, big move this week, putting in a doji so far. Let's zoom in to the daily and starting to dump a little bit here. So the thing about the Russell is it's small caps, more interest rate sensitive items bounced off of its 200-day moving average, but the more interest rate sensitive items tend to be a little bit more positively correlated with digital assets, but not so much. Right now, software is really what I'm watching when it comes to digital assets. So I'm thinking that since the Russell seems to be pushing a little bit lower here, that we might actually end up getting a retest of the 200-day moving average. Now, volatility has not backed away by much. We have not seen, vol just get monkey hammered here. We haven't really seen that. So this is like a normal correction out of volatility after a big pump. But the fact that it hasn't broken down further and seems to be in this expansionary regime higher, that tells me lower prices for equities. Take a look at the NASDAQ breaking back down below 25K. Yeah, looks as though we're going to retest that 200-day. What does that mean for software? If we retest that 200-day, let's take a look at IGV. IGV rolling over. So if IGV is rolling over, and we know that IGV is positively correlated with BTC, with Bitcoin, well then if IGV is rolling over and it doesn't recover, it actually pushes lower, I would expect that, hey, maybe the rally is in for Bitcoin. I'm already short, so I'm short either way. But all I'm going to be doing if Bitcoin actually pops higher is adding to my shorts. That's all I'm going to be doing because this is a Bitcoin bear and I'd like to make some money on the way down. So S&P, NASDAQ, Russell, all backing away. Let's take a look at the dollar. Now, the reason why the dollar is important here is if we get another pop out of crude oil, which it seems likely that we will get, you'll probably get some safe haven bidding on the dollar. Now, if we get another safe haven bid into the dollar, well, that is just more bond market volatility. And that would also be negative for risk assets if the dollar starts to pop a little bit. I've got resistance on the dollar up here at 100.5. So that level of resistance up there, should that hold? Okay, great. But if it breaks to the upside, there's a lot of shorts that are going to be buying back their dollar positions at a big loss here. So we've got, you really, yeah. So the X, yeah, you guys, I'm sorry. The X feed, StreamYard gave me a problem. It wouldn't allow me to stream to X. I got a failure message a couple times in a row when I tried to stream to X here. Let me just see if I can add it. Maybe it'll let me add it. And we'll see in a second. No, it says an error occurred. It says this is usually temporary. Wait a moment, then try again. So I'm just kind of stuck. I'll be streaming just to Arena and YouTube. Okay, but if we're talking about the dollar and we're talking about yields, then and we're talking about crude, we definitely need to check in on gold. And I see in the chat, what about gold? So let's check this out. Notice how similar this pattern looks. You see this during the parabola. We got a couple of, and you could even draw in a third one right here. See this? These trend line levels of resistance that ended up breaking on the way up. See, what you'll notice the more technical analysis that you do, the more time you spend in front of charts, is that assets have like their own personality and they like to put in similar patterns. So, like gold puts in whatever pattern it puts in, this pattern. Bitcoin likes to put in inverted head and shoulders and bull and bear flags. Solana has its own personality. So they've all got a way that they trade. And for gold, we can see this pattern repeating over and over again over the last, year and a half or so. Push to a fresh all-time high, back away, test resistance, back away, break it, push higher. All-time high, test resistance, break it, push higher. Same deal here. So all-time high, test resistance, and I should be expecting some type of a safe haven bid to come into gold. Especially if we're able to hold support. So let me just go ahead and remove these drawn objects now, and let's take a look. This is a very steep level of support. So I don't think that there's much predictive power in the very, very steep trend lines. The angle of the trend line is what I'm referring to. So something like this is about as steep as I would be willing to go on gold. So the question you've got to ask yourself is, do we test trend line support on the downside before we break out on the upside? And with all of the geopolitical uncertainty, I think it really depends on what we see out of the dollar. Because if the dollar somehow pushes sharply higher, well, I think that would be negative for gold. So if we just take a look at DXY again, real quick, dollar looks pretty positive right here. This to me looks like a bull flag formation with the pole and the inside bars painting a flag at 200-day moving average support. So that's actually pretty bullish for the dollar. And then if we take a look at something like, I don't know, how about, let's take a look. If we're taking a look at the dollar, then we've got to take a look at yields. So let's see here. I want to see if I can find something a little bit better to listen to. Let me see here. I just like vibe coding and vibe trading. This stuff is great, man. So here are yields. This is the 10-year yield. And what we need to be focused on here are two levels. So I'm just going to go ahead and delete these horizontals, delete these arrows. We've only got two levels to focus on. Support below, resistance above. Yields are breaking out. They're above the 200-day moving average. So if yields continue to break out, then you would expect, and this is 10-year yield futures, you would then expect notes and bonds to continue getting sold. So here's ZN. ZN is the 10-year note. So look at all that volatility out of the 10-year note. So finding resistance, backing away sharply. Same thing with bonds. Bonds, this is the 30-year, this is the long end of the curve. Finding resistance, backing away sharply. Bonds getting sold, rates pushing higher, sharply higher. Here's the US 30-year. Look at how quickly yields have pushed higher at the long end. So that is not good for home buyers or home sellers, really. And I think we should expect this to continue. So if yields keep pushing higher, well, dollar up. That's what that means. So if yields keep pushing higher, let me just zoom out here to a weekly, because from the weekly, I can go ahead and adjust this trend line to where it actually found support. So right there, that was the level of support in the dollar. This was the start of 2025. I can delete that. And we've got long-term support below, but we don't need that either. So this is all you need. If you're analyzing a chart, all you need is support, resistance, and trend. If you can identify support, like I did here, if you can identify resistance, as I've done here, then the last thing you need to do is identify the regime. This is an uptrend. Well, then you can, that's basically 99% of technical analysis. You don't need a bazillion different indicators. So what I'm looking for here out of the dollar over the next couple of weeks is a test of 100. A test of 100 means gold probably backs away from this resistance a little bit. If we zoom in to a daily and just take a look here, if the dollar is pushing higher, then we probably see gold back away and maybe test support down here at, you probably got support at like 48.50 before you get to trend line support at 47.50. So I've got a gold long position right now, but it's relatively small. I'm going to just keep that and hold that open because I want to be long gold for the rest of the year. So yeah, let's take a look down the list at a couple of other digital assets. How about Ethereum? Ethereum's starting to perk back up a little bit. This is a daily chart, starting to get a little bit of a bounce here. Looks like ETH wants to push higher a little bit, along with Bitcoin. Remember, this is March of the midterm year for BTC, and that should mean that we get some type of a bounce out of BTC. But that bounce should be a selling opportunity. This is a bear flag in formation here. So we got the down move and painting a flag inside this pole here. So I expect that once we get that last push higher, then everything rolls over sharply. That's my expectation. It's probably just like a single day move where we just get push above resistance and then that's it. So down here at 1250, that's where I'll start to become a buyer. Let's take a look at Solana. Sol. So this is, again, a bear flag. That's exactly what this is, a bear flag. And we're just underneath resistance here. It's trading at $87, but resistance comes in at 95. So as you zoom out on the chart of Sol, it starts to look really, really horrible, actually. This is like one of my highest conviction shorts because this chart looks like shit. Like you got, bearish thing after bearish thing. You got a head and shoulders pattern, very bearish. You've got a breakdown of an important level of support, very bearish. And to top it all off, you don't have any more support until $30. So this is also a bear flag, a really big bear flag here. You've got the pole and the flag right there. So I've got bearish indicator after bearish indicator also trading well below that 200-day moving average. So nothing good ever happens below the 200-day. This does not look good at all. That's why I'm short. If we get a pop out of Sol, I'll just add to my shorts. I'll buy them back at $30. Let's take a look here at some other alts. So SUI, SUI. Now this one put in a monster bounce, back in December, which turned out to be an amazing selling opportunity. Now these high volatility altcoins, and these chains, these have not proven themselves as viable businesses. Not really, not yet. So very high risk. But I think that what we're going to see out of SUI is, along with the rest of the altcoin space, more of a bounce. I think that we get more of a bounce throughout the rest of this month. Take a look at XRP. XRP, this is just some type of a scam token. But you've got probably more room to bounce up to maybe as high as $1.66. That's possible. Unlikely, but I think possible. So let's see here. I want to see if I can find something else to listen to. How about go back on YouTube Music, and let's see. We got that Something in the Orange replay. That's kind of cool. Let's check this out. So XRP, horrible shitcoin, terrible business, and I would love to see this one just vanish. So, this is not what you want to be buying. This is like central bank digital currency type shit they're building out. So this is closed source, closed ecosystem. They're partnering with the very worst governments in the world to roll this shit out. Like, don't touch this. This is horrible. 75 cents is where I'll start buying back my shorts. If it bounces up to $1.65, I will add 2 shorts. And because that's just my level of conviction, I think that we're in a Bitcoin bear market. I think that we're in like the 3rd inning of a Bitcoin bear, maybe the 4th inning of a Bitcoin bear. So that means we should be getting a bounce, and it's a sellable bounce. So if we get a bounce sharply higher to $1.64, I'm selling that bounce and I'm waiting for 75 cents to buy it back. But really, I'll keep the short open all the way down to 30 cents because if we get true capitulation out of Bitcoin this bear market, then there's no way in hell that XRP is going to be able to hold above 75 cents. So if we take a look, what would true capitulation for BTC actually look like? Because it would not look like 50K. 50K is not true capitulation. True capitulation is all the way down here at like 32 or 33K, like this level. This is ultimate, like real capitulation. So, what would that mean for altcoins? That would mean like Altmageddon. And that's kind of what I'm playing for with a part of my portfolio this year is Altmageddon. So, if there are bounces, I add two shorts. Let's take a look here at, this is ARB. And ARB has actually been doing a great job at putting in, or at least not making any more fresh all time lows. So bouncing over the last couple of sessions here. But man, once this one breaks down below 8.7 cents, the floodgates open. There's no support down there. So on the upside, however, we could see a big, big bounce. I mean, this could put in easily just to get up to resistance, like a 60% bounce. It absolutely could, especially since it's so illiquid. It's been so sold. It could definitely bounce in a big way, but that would really require that Bitcoin puts in a huge bounce. And how in the fuck is Bitcoin going to put in a huge bounce if it looks like the stock market is about to actually roll over? Like, no way. So I'm looking at the 200-day moving average for the S&P, watching that like a hawk, because if that really breaks and we see volatility up above like 27 up here, well, then you're going to see Bitcoin just dump down to like a lower notch. It'll just be down with a 50 handle real quick. These $70,000 levels, amazing if you are a holder and you want to be able to exit for cash and then buy it back lower. Because if the S&P starts to actually push sharply lower, Bitcoin I think is going to be down here at 50K in a heartbeat. At the end of the day, Bitcoin is a risk-on asset. It is not a safe haven asset, not yet. I think it will start to be treated like one maybe over the next 5 years as people really start to get fed up with the inflation inherent in the US dollar system. But not yet, not yet, especially not with Trump's pro crypto agenda. So we'll see. Let's take a look at Oracle. They reported, they reported last night. This is a software player. That's why this one is so important, because after they reported big move higher, let's zoom in so that we can see that. So here's the gap. That's a big gap right there. So that's a big pop higher out of Oracle after reporting, but spent the entirety of the session today just giving it back as much as it could. I think that's probably all she wrote. So if we, go ahead and just mark 153. Yeah, 153 is the level. Let me go ahead and grab a trend line tool here. And let's just mark 153. So that would be the gap fill. That would be the gap fill for Oracle if it continues to push back down. Big software player. Bitcoin is positively correlated with software. So if Oracle just pushes back down to its price before reporting, well, that probably means that Bitcoin has a little bit more downside. Let's see what Microsoft is up to. Microsoft, another big software player, of course, rolling over. Dead cat bounce. You see this dead cat bounce? So Microsoft starting to roll over. We've got support below, trading well below this 200-day moving average. Two false breakouts after putting in all-time highs. And Microsoft has a ton of CapEx. So all that AI CapEx, these companies are not going to get rewarded for that AI CapEx forever. And they're starting to get punished after reporting increasing CapEx on earnings calls. So it's just a matter of time until eventually they're going to start cutting CapEx, and then that'll feed through to NVIDIA earnings. And the day that feeds through to NVIDIA earnings and NVIDIA misses maybe sometime over the next 3 quarters, well, then that would probably be, a big opportunity. If Nvidia starts to fall off a cliff, that would be a great opportunity to get short Nvidia. So let's take a look at Amazon, another one of these items with a ton of AI capex. Take a look at that gap fill. You see this gap fill right here? Let me just go ahead and delete this drawn object. Let's grab a trend line tool right there. You see that fill? So this was the earnings gap down. So into earnings, just selling off, gapping down into earnings, and then gap down and go. So that is very bearish. And then the retest of the gap, the top of the gap, and rejected and pushing lower again today. And also, if you zoom in, you can see this. We've got a really nice bearish engulfing candle that formed right here. So the body of this candle is engulfing the body of the previous day's candle. That is a short-term bearish continuation pattern. So we should expect more downside. And indeed, in the after-hour session, Amazon is trading off by 2 points. So let's see, where do we wrap things up? Anything in the chat? Anyone want me to take a look at anything in particular, like any particular altcoin or digital asset or anything? It doesn't matter what it is. You could tell me I want to take a look at Farcoin. Pop it in the chat. I'll take a look. Well, if it's up to me, I'm going to take a look at Fartcoin. That's what I'm going to look at. Here's Fartcoin trading at 15 cents. So this one, I expect this to go to damn near zero this year. There's no use case for this. It's part of that awful Solana casino stuff. I mean, look, I made a lot of money on Fartcoin, but I know a lot of people lost a lot. So I don't want that to be, I don't want crypto to be known as like a casino like this. So yeah, I would like to see this die. And so we can just move on from the fart coins of the world. If you're looking for an alt, maybe take a look at Hype. Like Hype, just amazing performance here. And this one actually has been outperforming Bitcoin because this token actually returns yields to token holders. So all the revenue that the Hyperliquid protocol makes gets returned to token holders. All right, we have run out of time. I want to just wrap things up by sharing the school community here. So this is the DeFi University School community. We've got 260 members. We've got about 20 guys and gals that jump on every live call in the paid group every day. In the classroom section, I put together amazing DeFi protocol deep dives. You can watch replays if you're a paid member of all of the live streams. I run private coaching. I put together, what I think are the best courses in the English language for beginner DeFi concepts. Building a resilient investor mindset, learning how to provide concentrated liquidity like a pro or avoid it altogether. You've got to learn how to operate on DeFi money markets, and trading perpetual futures is a core skill set. And the courses are all free over in the DeFi University School community. The link is school.com/DeFi University. Really hope that if you guys got some value out of this, that just sign up. It's free over here at DeFi U on School. So thank you so much, everyone, for joining me live. I will see you all tomorrow, Thursday, March 12th. Tomorrow's going to be an 8:30 p.m. Eastern Standard Time call. So I will see you then. Have a great evening.